Hey everybody, I hope everyone is doing well and had a good day. This is the overview of the Emini 5-minute chart for Wednesday, November 20th, 2024. Here's the daily chart. There was a lot of sideways price action and we had this bull breakout, but we were losing momentum far above the moving average, and then we got this endless pullback, pulling back to about 50% of the rally. And you can see there's buyers here. So the bears having trouble breaking below the 50% pullback level of this rally. So we found buyers once, we tried again, and we found buyers a second time. So the problem for the bears here now is they've tried twice to break below the 50% pullback, and now we have a couple of bull bars closing near their highs. So bears might get out above this bull bar, and we may have to test the highs before we find traders willing to sell. This rally was strong enough that it probably needed a double top before there was any major reversal. We got a trendline break by the bears. Now traders are watching for a retest of the highs and then possibly a major trend reversal to the downside. Bears hoping we get a double top, break below this neckline, and a measured move down to test the bottom of the buy climax. The bulls want the opposite. Bulls want a double bottom, measured move up. Up to about 6,200. I also mentioned coming into today, one more time, look at the daily chart here. Look at the past 3 days. We have a bear bar, then we have a small inside bar, and then we have an outside bar. This is tight trading range behavior. And it's clear if you look at, here's a 15-minute chart. Just look at the past few days. And here's what we've had. We're down, we're up, we're down, we're up. Bears, they see lower highs until here. Then we have a higher high. They want lower lows, but they get a higher low. So you can see the market as being in a bear trend and in a bull trend. And at this point, the problem for the bears, we had this bear trend line break, retest of the lows, and now the bulls looking for a major reversal, but finding resistance here at the top of this range. So here's the 5-minute chart for today. The blue lines above and below are the prior day's high and the prior day's low. So let's just go back. We opened with a small gap down, but overall we're in a trading range here. And one of the problems up here for the bulls is what I just said on the higher time frames. Overall, we're in a trading range. So even though this rally was fairly big, it could easily be a leg in a trading range. Look back here. This rally, fairly big, but we ended up selling off all the way back down here. And the same could be true here. And especially when you get a trend line break like this that gets bars completely below the moving average. So the bears are strong enough to break a trend line and get bars completely below the moving average. This is going to convert the market into a trading range, if not an opposite trend. This sell-off down to 63 yesterday was likely to get a second leg down. Why? Because we have trap traders up here. Think about any trader who, let's think about the bulls first. Maybe a buy the close rally up to 54. You buy up here and then you get trapped by this sell-off. And if you use a wide stop and scale in, you can avoid a loss. You can see the market retested up to these highs. But the point is, if you're a bull and you bought up here and you got this down to 63 for follow through, you're probably not eager to buy when the market gets back up here. So in other words, there's sellers above. disappointed bulls looking to sell out of their longs, and then you have bears who missed the sell-off. It's pretty hard to get short up here, and a lot of traders didn't get short, and the breakout traps traders, and that means both bulls and bears are trapped. The bears were trapped out of a winning trade, and they're also looking to sell up here for a second leg down. And that is what we might be getting here with the gap down and bar one, leg one, pullback, lower high, major trend reversal. Bears going for, again, a lower high, major trend reversal, leg one, pullback, maybe leg two. Bear bar closing on its low, probably going at least a little bit lower. Minimum target for the bears, probably here, this swing point. So if it's likely that we're going down here, traders are not going to buy here. They're going to wait to buy here. So bears won't take profits. They'll wait until the market is lower, the price is lower to take profits. And if the bulls also believe that the price is going lower, they're not going to buy here. They're going to buy when it's lower. Bar two, surprise bar. Big enough bar. The leg count may be reset. You do have to be careful that it's not leg one, pullback, leg two, second leg trap. But the reality is bar two closed below a lot of bars, reversing a lot of bars. Now we have consecutive bear bars, one being big, both closing near their lows, certainly always in short bar two. Any reversal will probably be minor. Here's a breakout point. Any trader betting that this was the low of a trading range, down, up, down, anyone who bought here got trapped by bar two. So sellers above, second leg down, likely. We went sideways for a few bars here. Bears getting minimum follow through, doji bars, so not bull bars, not big bull bars closing near their highs. But it also could be better for the bears. This big bear bar likely attracted profit taking by the bears. Anyone who was short up here using this big bar as a gift to take profits. But no reason to buy here, so still always in short. Second leg down still likely, and then we get a bear bar closing near its low, bar 5, low 1 short after a breakout, possible breakout gap or breakaway gap, and at least one more leg down is likely, so reasonable for traders to sell here, and still nothing for the bulls to buy. Good entry bar for the bears. Consecutive bear bars closing on their lows, strong enough down for a second leg, and this entire sell-off is strong enough for a second leg. So again, probably sellers above, and second leg down likely. 7 rallied above 6, but 6 was a bad stop order buy signal for the bulls, so more traders likely selling above 6. Think about 6. Would you really want to buy? If you think through stop orders only, if you had to choose between buying above bar 6 and selling below bar 6, what would you do? And to me, it seems obvious the choice would be, if I had to choose between buying above 6 and selling below 6, I'd rather sell below bar 6. There hasn't been a trendline break, and the bulls need at least a trendline break and a retest before any trader is looking to buy against this. Again, the reality is that this might be a leg in a trading range, a broad trading range, and the bottom of the range could be all the way down at yesterday's low. So 7, trying to reverse. We tried to reverse above 3, failed, tried again above 6, failed, and then another give up bar on bar 8. The problem with bar 8 is that we have a sell climax, a pause, sell climax, pause, a third sell climax, bar 8. Bar 8 is also one of the biggest bars on the screen, besides bar 2 within here. So this might be another place where bears use this bar as a gift, similar to bar 2. In other words, traders may not be too eager to sell bar 8 because it's big, it's a third consecutive sell climax, and we're getting low in a trading range. We're testing an area where traders were trapped over here, maybe, let's just say, this breakout point on the bar 12 breakout yesterday. That's where we're testing. We may start to go sideways here. That doesn't mean that we're going to reverse. This is still strong enough and likely to get a second leg down. But after consecutive sell climaxes, and now we're getting to the bottom of an overall trading range, you have to be thinking, if the momentum starts to slow down, we're this far below the average price, a couple of legs sideways to up becomes more likely than lower prices. So some traders will sell here, they'll hold short, but when the momentum starts to really slow down, they'll probably give up and look to sell a pullback instead. 9, a much smaller bar than 8, plus a tail, buyers into the close. Probably bears entering the channel phase, and bears becoming more efficient. Rather than selling closes, they may start to sell pullbacks and take profits at new lows. So again, we go to a new low on bar 10, and then we rally again. So now we have 3 big pushes down, and then 3 smaller pushes down here, again with support to the left. Still nothing to buy, but probably reasonable for bears to exit above any bull bar. And then we have an outside up bar 11, closing near its high. Big enough bar, it's probably going to get a second leg up. And bears may exit above 11, although they may not have to, but with consecutive sell climaxes, possibly the bottom of a trading range, far below the average price, I think a lot will, and they'd rather look to sell a pullback. Look at bar 7. Bar 7, not a very strong sell signal bar. Context was okay, but the bar itself, not great. And then a huge bar, bar 8. And this bar created a gap between the bar 7 low and these prices down here, the close of 8 or the high of 9, 10, 11. There's a space between these prices. And the odds are, first, that we're probably going to pull back after consecutive sell climaxes, but also we'll probably retest the third leg of the sell-off. So 1, 2, 3. So somewhere up in the bar 7 area. And if and when we do, there's probably more sellers up here because of the trapped traders above. 12, starting to go sideways. We may have to go a little bit lower, but 12 is a low 1 signal bar. And now we have 4 bars sideways, far below the moving average. So traders may not be too eager to sell down here, and bulls will start buying below bars. 13, strong enough bull bar for a second leg. I don't want to get too far into details, but I mentioned the gap. So if you're a bull and you took a chance buying below bar 7, you obviously got trapped here. And then maybe you scale in buying above bar 11. The midpoint of your 2 entries is just about this middle red line. And that's where 13 vacuumed up to. So you will have some traders selling there, taking a chance. But like I said, 13, a little bit too strong. Stronger than the bears would have liked, and a 3-bar bull micro channel. This will probably get a second leg up. And then we pulled back and then rallied again, 14. So now a 4-bar micro channel. Decent pair of bull bars, 13, 14, probably going at least a little bit higher. But 15, another pause. Rally, 11, pause, 12. Another rally, another pause. Now a bad buy signal bar, 15, probably sellers above, and we're getting close to the resistance area where traders were trapped. But the approach to that resistance area is a little too strong. Now 16, another bull bar, but 3 legs up to a resistance level. Probably more sellers in this area, but strong enough rally that any pullback will likely lead to a second leg. So now we have big down, big up, big confusion. Lots of bars below the moving average. No bars closing above the moving average today, so slightly more bearish at this point. But this doesn't happen in strong bear trends. Consecutive sell climaxes do not happen in strong bear trends. So overall, this might be a big trading range. Also worth noting that bar 1 is the high of the day. And I mention that because bar 1 remains the high or the low of the day, in general, only about 20% of the time. And think about it, when that happens, it's usually a trend day. And you gain more information as the day goes on. But just so far looking at this day, consecutive sell climaxes, a deep pullback, I'm not sure this is a sustainable bear trend. But more on that later. Going sideways, 17, probably sellers above. It's an inside bar, 3 legs up to a cluster of resistance. 18, the bulls trying to get the breakout, but 19 outside down, disappointing for the bulls. Now the bears, even though, let's see, it's an 8-bar bull micro channel, the context is bad for the bulls. So some bears will sell here, taking a chance we get a second leg down, maybe below 11, maybe test the prior day's low. But the bulls, they have a strong enough rally that I suspect they will look to buy 50% of the rally, a 50% pullback. Big down, big up creates confusion. Now the bears need a second leg down, and the bulls want a second leg up. And that creates confusion and a trading range. Bear breakout 20, strong enough, 19 and 20 for a second leg down, more follow through 21. 3-bar bear micro channel, but bouncing at 50%. So you can see traders bought here, maybe bears taking profits and bulls buying, hoping for a bounce at 50%, leg 1, pullback, leg 2. But the approach to 50% was stronger than the bulls would have liked. First reversal up, likely going to be minor. Second leg down, likely. Small inside bull bar, probably sellers above. 23, low 1, signal bar, bear bar closing on its low. Second leg down, likely for 19 through 21, and for the sell-off on the open. So reasonable for traders to be selling here. Bulls getting out of longs, looking to buy lower, and bears looking for lower prices as well. So 24, good entry bar. But now 2 legs down, 1, pullback 2, and now we're getting lower in the range. The market often reverses after 2 or 3 legs in a trading range. And when the market is in a trading range, it's important to count legs. And that's why all this overlap tells us the market's in a trading range. That's why I see 3 pushes down here, then I see 3 pushes up here, then I see 2 legs down here. It's important to count legs when the market is in a trading range. 25, a little disappointing for the bears. 2 legs down, momentum not there for sell the close bears. 24, disappointing entry bar. We triggered the buy above 22. We have a second reversal, 25. Some traders might exit shorts above this bar. I'm not sure it's necessary, and it's sort of aggressive to buy. I think the channel down is fairly tight, but we do have a big enough rally and 2 legs down that we may find support down here. And then 26, a little bit of a surprise bar. It's a big bull bar, closing far above the high of the prior bar, and strong enough breakout, second leg up, likely. 27, good follow through for the bulls. Bull bar closing on its high, crossing the moving average. Momentum looks good for the bulls. But overall, looks like a trading range. So the bulls have resistance above to take care of. One magnet above is the bar 4 high. Bear breakout, pullback, channel phase begins, another bear breakout. But the point is, the pullback and channel phase began here. The bar 4 high is likely to be resistance, and it may be the top of a trading range. The start of the channel often becomes the top of a trading range. Channels evolve into trading ranges. This rally is expected to get a second leg up. Deep pullback, the bulls going for their second leg. Minimum target is above bar 19, and that was reached on bar 28. Now we have a 3 or 4 bar bull micro channel. Bars look pretty uniform in size. Micro gap, the high of 26 is not touching the low of 28. Bars closing near their highs. Really not big tails on the bars. These, especially 27, 28, are good. This breakout looks good for the bulls. It's likely to go at least a little bit higher, and a second leg up is likely. The one problem the bulls have, a couple things, is that it's overall trading range context. So even though this rally looks decent, just look to the left, and we have an even bigger sell-off here. And we have a rally here, a deep pullback, and then a second rally here. So this might be leg 2 in a trading range, possible second leg trap. More good follow through for the bulls. Momentum looks good. Another bar that's uniform in size with the others. But still, we have the bar 4 high to worry about. Bulls will buy closes, but as soon as they're disappointed, they'll probably look to exit. 30, you can see exactly where we tested. Traders taking profits, bulls taking profits, and bears selling, looking to short what might be the top of a trading range. Buy the close bulls 29. Disappointed 30, they may look to exit at break even, and that's what happened on 31. 31 retested the close of 29, and traders sold. Now at this point, this is important to understand. We have a bull breakout, and it's pretty decent. But when you look at this chart, is the market in a trend or is it in a trading range? And it's clear the market's in a trading range. It's not clearly a bear trend, not clearly a bull trend. And we're down, we're up, we're down, we're up. So because the market is in a trading range, if you're buying anywhere up here, you need momentum. Your premise is that we're breaking out of the trading range, and one big problem here, let's think of it this way, the trader's equation. In theory, the stop for the bulls is down here. And if you buy the close of 29, your risk is all the way down here. 1 times your risk for your reward is all the way above the prior day's high. And you have to be 60% sure or more than 60% sure to take a 1-to-1 trade 1 times your risk. And here the momentum looks good for the bulls. But as soon as we start to stall, 30, 31, at some point, a lot of the bulls, they see how big the risk is. They see the momentum starting to fade, and they see that we're in a trading range. And traders have to reduce their risk. The easiest way to reduce risk is to reduce your position size. So bulls start to take profits up here, and they may wait for a deep pullback before buying again, because this is still likely to get a second leg up. But because it's a trading range environment, what's so common with trading ranges is breakouts that what is so common in trading ranges are breakouts that are strong enough to expect second legs, but the second legs are delayed and they get deep pullbacks. And that may be what we're getting here. Think about it. Bear breakout, second leg likely, but deep pullback. And then a rally, deep pullback, but still second leg up likely. Same thing here. The rally looks decent, but momentum traders are bailing out of the trade. And we're above the moving average in a trading range. So the bulls are not buying value up here. Bulls who are buying, we're buying momentum. And if there's no momentum, they will bail out of the trade. 3 consecutive bear bars, 32. So now we have a 3-bar bear micro channel against the bull breakout. And the 3-bar bear micro channel will likely get a second leg down. So bulls may bail out and bears may enter short, expecting lower prices. 33, acceleration down. But 33 it is acceleration, but look where we are. 50% pullback of the rally. So yes, some traders may buy here, but after 4 consecutive bear bars, maybe not ideal. And again, strong enough down for a second leg to be likely. Another bear bar, 34, closing on its low, but smaller than 33. So momentum slowing down for the bears as we get lower in this range. Traders likely looking to buy the breakout point, 25 high. maybe above the 24 high. These prices in here create support. Another bear bar, but buyers into the close. And now we have a deep pullback. So a strong rally, very deep pullback. And second leg up likely, but second leg down likely as well. This is another big up, big down situation. And so often what happens in these situations, the market converts into a contracting triangle where we start getting higher lows and lower highs. Because both sides need second legs. We have trap traders below here looking to buy, trap traders up here looking to sell. So that creates support and resistance zones. 36 bull bar closing on its high, probably going at least a little bit higher. A strong enough breakout for a second leg with targets above, and then follow through 37, but a much smaller bar. And it's against maybe a 7 bar bear micro channel. So really not ideal for buying. Also, we may be at the midpoint of that sell-off, so really not an ideal place to be buying. Bulls get one more bar of follow-through, but now we're testing, let's see. We had a breakout point, the 32 low, 33 bear breakout. And we have the lows of these bars, and these create resistance. Pulling back 39, but 3 or 4 bar bull micro channel, second leg up likely. 40, a second leg up, 1, pause, 2. And maybe this is a second leg up sideways for the bulls, testing the low of bar 30. And we're back in the sell zone. So if you're buying, you need momentum. And a rally with a bear bar and then another bull bar, not great momentum. If you're buying here, you really need the next bar to go your way fairly quickly. And then we went outside down 41. Strong enough bear bar for a second leg down, but let's think about breakout points and support. And remember what I said, big up, big down, triangle becomes likely. So big enough bear bar for a second leg down to be likely, but it's in a trading range. It's not breaking out, or let me back up, breaking out below the prior bars, but lots of overlap with the prior bars. So traders probably more inclined to sell a pullback rather than sell the close 41. 35 was a bad stop where to buy, signal bar, and it was against a micro channel down. Traders were trapped here. Bears sold, bulls didn't buy, and when we retest here, there's probably support. So 41, 42, bear breakout and follow through, minimum follow through, and context is bad, probably going to bounce, but likely sellers above 42, second leg down likely. 43 looks like a minor reversal, and this still needs a second leg down. But you can see what's happening. The market's getting squeezed. Higher lows, lower highs, the range getting very tight. And through here, this became a very tight trading range. I remember thinking on bar 47, I was kind of tempted to buy here, and my thought process was this bull breakout is still likely to get a second leg up even after the deep pullback. We have 2 legs down, 1 pullback, 2, nested, 1 pullback, 2, good signal bar. Reasons to buy here for a swing, but because we're in a tight trading range and in the middle of that tight trading range, I decided not to take it. I was also going to mention I marked the open of the day because the open of the day is often a target, especially on trading range days. And if you think about today, up to bar 47, we're about halfway through the day, a little more. And ask yourself what kind of day this is. Is this a bear trend? Is it a bull trend? Or is it a trading range? And it's clear that it's a trading range. We had a sell-off on the open, but sideways since bar 3. Down, up, lots of overlap. So because of that, and the fact, what did I say about bar 1? Only a 20% chance bar 1 remains the high of the day. And if it's going to remain the high of the day, it's typically going to be a bear trend day or a bear trading range day. and this is becoming more 50-50. Strong enough sell-off for a second leg down to be likely, but strong enough rally, second leg up likely, and this is a lot of sideways bars. So breakout direction becomes close to 50-50. We have a contracting triangle. So my thought process, again, for wanting to buy here was that we may get all the way back up here. Because for this to be a bear bar, think about the daily chart for a second. Yes, there was a sell-off on the open, but we had a deep pullback, lots of buying pressure. And for this to be a bear trend bar on the daily chart, the bears they would prefer that we close below the midpoint of the day. Here's the midpoint of the day, just about where bar 47 is. But preferably, they want a close near the low. For the bears to get down to the low, they need to do better than this. And if the bears are not going to own the day, and it's a trading range day, then think about the appearance on the daily chart. Big sell-off, but then sideways. It's possible we rally back to the open and have a small body and a big tail below, and it becomes a trading range day. Basically a doji with a big tail below and a small body. But too tight of a trading range for me, and let's think that through. I still think it's a reasonable buy above 47, but if you buy 47, 48 is a disappointing entry bar. If you're buying 47, you want 27 to be your entry bar, and 48 is a much smaller bar. Hardly breaking out, I'm not even sure. Maybe it broke out above 43, maybe it's closing right at that high. But the point is, it's disappointing. You need to have expectations when you're taking a trade. You need to have a plan when you're taking a trade. You need to know what you want to see when you're taking a trade. So for me, if I'm buying 47, 48 is disappointing, and I will scalp out of that trade if it starts to go against me. So more tight trading range. Bears trying to get the breakout of the triangle. I had to pause there for a couple of minutes, but I think I was saying the bears here are trying to get a bear. They're trying to get the breakout of this triangle, and different computers will draw it different ways. So, maybe from here, depending on how you draw it. But does this look like a strong bear breakout? We're not even below bar 47. And to me, 47, 48 is a big enough move that there's probably buyers below and a second leg up likely. So this doesn't look like a very strong bear breakout to me. 3 consecutive bear bars. We got below bar 47, but now look where we are. We're right at the low of 35. We're approaching the low of 35. And yes, this bear breakout was expected to get a second leg down. The minimum target for the bears is 1 tick below bar 35. And we sort of have a spike and channel bear trend here. Bear spike, deep pullback, and then channel. Let me draw the channel. So as far as selling here, to me, the way I see it, this rally is strong enough for a second leg. There's support down here. Yes, this sell-off is strong enough for a second leg, but this may be the second leg. And look at the second leg. 1, pullback. 2, pullback. 3 legs down. So this is already a late leg. 1, pullback, 2. And this is a leg 3. So it's a nested late leg at support in a trading range. So probably buyers down here. You can see 52 tested the low of 35. So even though we have a 4 or 5 bar bear micro channel here and a second leg down is likely, for me, if I was short, I would get out of shorts above 52. I think there's too much of a risk of a reversal up here. 3 bar bull micro channel, not very strong. It's a channel on a smaller time frame. Doji, basically doji, trading range bar 54. 54 breaking out of a channel, so a little bit climactic, and probably sellers at the 51 high. These bars are still below 51. So yes, still second leg down likely, but this 3-bar micro channel broke that trend line. So another reason, probably buyers down here. This is a low 3 on a smaller time frame. We see it as a low 155, but maybe 3 or 4 pushes up. Bears trying to get continuation, but lots of support. They try on 56, they fail. They try again, 59, they fail again on 60. So I thought this was really interesting. And actually I had to leave. I knew I had to leave in just a couple of bars. So what time is it? 14:30, about 14:40, 14:45, I had to leave my computer. So I was done trading at this point in the day. But I thought this was really interesting. Let's see. I want to pull up a 1-minute chart and show what I'm seeing here. So for a second, let's see. Let's just ignore the bars to the left. And all we see is this. This actually isn't going to work because that's going to go away when I draw. But the point is we have a bear trend, a trend line break, and then a weak retest. A couple of legs down, lots of overlap, buyers at the low. The bulls want a major trend reversal here. Again, bear trend, trend line break, retest of the lows. There's support, 2 legs down, and then the bulls looking for a major trend reversal. Now, what I think is so interesting about that, maybe let's look at a 3-minute chart. And this shows it pretty well. I mentioned the nested sort of late legs, the wedge here. Whoops. So we have this sell-off, which second leg down likely, and here's the second leg, 1, 2, 3. The third leg fairly strong, second leg down likely, but here's a trend line break. So what I just demonstrated on the 1-minute, this is it right here. Here's that bear trend, and this is the trend line. The bulls broke the trend line. We got a retest of the lows, 2 attempts down, 1, pullback, 2, and then a big bull bar closing near its high. To me, bears have to get out here, and bulls will buy, taking a chance. And think about all the support. So to me, the context made sense for a swing trade here. And it's not that I have regret, but I do think it's probably worth me practicing taking swing trades, especially when I can't be at the computer. Just put on a trade, set my stop, set my limit order, and let the trade do its thing. Because I really thought the context was good here. And I saw this 3-bar bull micro channel. And I thought it was a pretty decent breakout. Closing above these bars, I saw the sort of major trend reversal in here, but the bigger pattern, 2 legs down, this rally, second leg up likely, the open of the day magnet. I thought there were reasons to buy here, and a reasonable chance we'd get a rally somewhere up here toward the end of the day. But I ended up not taking it, and that happened to me a few weeks ago. The point is, I think for me, I think it would be worth practicing taking swing trades that I just put on and leave them alone. The rally getting stronger, 63, more follow through 64. Strong enough bull breakout for a second leg. Minimum target probably up here, the bar 30 high for the bulls. This is a problem for the bears, trapped traders below. 65, 66, maybe second leg down needed, but this already might be 2 or 3 legs down on a smaller time frame. We're testing the midpoint of 63. That's going to be support. And there's already maybe 3-4 legs down. We're testing the high of 62 because 63 trapped traders. Bull bar and then a bigger bull bar. That breakout traps traders here. And when we retest it, support is likely. So now we have a high 168, although it's more of a high 3 and a micro double bottom at support with good context. Second leg up likely, bull bar closing on its high, reasonable buy here. Not a great entry bar, but still nothing for the bears to sell. Sure, there's a trend line break, but let's wait for the retest of the highs and see what the bears can do. Then we get bar 70, 71. The bears are not getting the double top. So now, it's not clear that there's a double top here. Al talks about this. The bears were hoping we'd get a double top with 64 and 69 or 70, break below the neckline, fall here, but we're not getting it. And therefore, we may actually get the measure move up. And you can see we raced straight through that. Huge bull bar, 73. 73 is a bar that I think a lot of traders will use for profit taking. It's late in the day, it's a gift. But we also have the magnet, the open of the day, not far above. Some traders may hold, taking a chance we get there. It looks like we're going higher. But you can see the pause on 74. Mostly bulls taking profits, probably not bears selling. But now we're getting a climactic bar toward the top of the range. And it might be a leg 2, 1, pullback, 2. So I think going sideways here, more likely with resistance at the open of the day. And if we get above the high of the day, bar 1, probably sellers up there. Outside bar, 75, but trading range bar. And bull breakout, second leg up likely, buyers below. Bull bar closing on its high, but we're at resistance. And this may be the sort of a trading range. 3 bars sideways, good bull bar, but lots of overlap. How much of 76 is actually breaking out of 75? Really just a fraction of it. And we're still not above bar 1. And then no follow through. So it looks like we're going more sideways. And that's just about what we did into the close. For the trades I took, if you watched my last video, this was yesterday. I took no trades yesterday. And I think I've mentioned this in an older video, but I have this extreme black and white personality. And what I tend to do is, like I said, it's extreme. So I'll struggle with taking trades. I'll take no trades in a day, and then I'll overtrade and take 15 trades in a day. So naturally, today, I think I took 8 or 9 trades. And honestly, my goal going into the day was to take trades and to trust myself, because that's what I've been struggling with the most. And at a certain point, I figured that I have this chart reading knowledge. I'm going to have to trust myself at some point. I can't just keep doubting myself. So that's what I was doing today. I'm still trading within the guidelines of my system, but I definitely came in today more aggressive than usual because I took 0 trades yesterday. So the trades I took, I sold below bar 2. I scalped out at break even, disappointed with the lack of follow through. I sold below 5. I think bar 6 sold off in the final minute of the bar. So I sold below 5, but exited that one at break even as well. And then I sold early in bar 8, but also exited during bar 8. I think I exited at a measured move of 2. Or maybe it was 1 and 2. But in any case, I was looking to sell a pullback. I was expecting a pullback after the consecutive sell climaxes, and I actually sold that midpoint, the 7 low and the 11 high. Got filled on 13, but I thought 13 needed a second leg, so I ended up scalping out of that one, break even. And then I may have sold above 15, scalped out of that one, break even. And I was looking to sell at the bar 7 low. Got filled on 18. And the way the market was behaving here, maybe I was too quick to exit, and this is learning for me too, but I scalped out of that one at break even, but then I sold again below 18, so I was short, and then I was not quick to take profits, so I got out when 26 began rallying, and 26 rallied really quickly, so I gave a lot back there. 28, I bought early in 28, somewhere around here, taking a chance we'd rally, but when 31 closed, or when 30 closed, I exited at the close of 29 during 31. I never got short in here. I made a mistake. I bought below 32, but quickly exited. That might have been a tiny loss. The mistake that these 3 bars need a second leg down. But the idea, I was looking for a pullback and a second leg up. I bought above 35, scalped out during, I think it might have been just about the high of 37. The reason I exited because we were testing that breakout point, the 32 low, and I believe we're at a measured move of 35. So maybe it's a little different on the SPY because I trade the SPY, but I remember exiting on bar 37. And then I mentioned through here, this was too tight. I didn't do anything. So that was it for the day. Stop order trades. I think you can sell below 1, sell below 2, sell 5, 6, sell 8 with caution. And then maybe you can buy above 11, taking a chance. Risk is big, but consecutive sell climaxes, bottom of a trading range. Not the craziest trade. I thought selling below 19 was reasonable. 27, 28, 29, you could buy those. And then maybe 3 consecutive bear bars, you may look to sell. Stop order above 36, maybe buy the close 37, but hard to do in this environment. Big up, big down, big up. Really no stop orders in here. And you can take trades taking a chance. This is what Brad calls fishing. You buy above 47, hoping for the breakout. You get 48, you just scalp out. And then you maybe sell below 49 or 50, hoping for the bear breakout. Disappointed here, scalp out. 60, you could take a chance or wait for higher probability, 61, 62. Start buying closes. 63 is okay. I mentioned the 68 high 1, micro double bottom, reasonable stop order. Could buy closes here. And that's it for stop orders. Limit order trades. Sellers above 3. And just think through 3. Is bar 3 strong enough to reverse 1 and 2? Probably not. So if we do get above 3, there's probably more sellers above. So reasonable to take that sell. Same with bar 7 or bar 6, triggered on 7. Is 6 a good buy? No. Tight channel, bad signal bar, sellers above. Same with 9 and 10, although at that point you're 3 pushes down low in a trading range, so not as good to sell above bars here. If you do, you're triggered on 12, and 12 is disappointing. You may just scalp out, and that looks like that's what bears did, giving up on 13. Not really a limit order buy for the bulls. Maybe you buy in the buy zone of bars, so you buy the midpoint of bars or lower, bar 14, midpoint, 15, but you're buying a weak rally after a bigger sell-off completely below the moving average. There's a sell above 22, inside bar, 3-bar micro channel, and then probably sellers above 24, but disappointing entry bar 26, and they give up 27. Dangerous to buy below 30 or even 29, which 29 didn't trigger until 32. But the reason is that we might be at the top of a trading range. Bulls need momentum, and they're losing it. And we can get a deep pullback. Probably sellers above 35, 34, 33 for this micro channel to get a second leg down, but we're getting deep pullbacks. 39, bad high 1, Even though it's a 4-bar micro channel, we're high in the range. Bad signal bar, you could sell above there. Though you could buy at the 35 high. I'm not sure if you would have. Yes, you would have gotten it at 42, but that's a scalp. 42, bad buy, sellers above. But also buyers down here, maybe at the close of 35, didn't quite get there on 47. Tight trading range. And then through here, another tight trading range. Bears want the breakout, but bad momentum. Low 155, but bottom of a trading range. Lots of support, probably buyers below. And same with 58. And then strong enough rally for a second leg. Traders will buy below 64, 63. We didn't get to 63. And then same with up here. Probably buyers below 74. For at least a small second leg after 73 and a retest of, or a test of the high or the open of the day. And that's about it. Where do we go tomorrow? Actually, first, the day type. Today was a trading range day. We had a bear swing on the open, lots of trading range in the middle of the day, and then a reversal, a bull swing into the close. So where do we go tomorrow? We're still in this tight trading range, and the bulls, they want the upside breakout. And maybe, here's a 240-minute chart. Rally, 50% pullback. We're going sideways. The market's in breakout mode. It's deciding where we're going. And the reason I pulled up the 240-minute, it's that major trend reversal here. Bear trend line break, retest of the lows, and then we have bull bars closing on their highs. So I think the risk for the bears here is that we do rally somewhere back up here. We have, again, this is the 240-minute. Let me just go back to the daily. But I was showing that with the smaller time frame here. Maybe this might help. So a sell-off, but it's climactic, parabolic, 50% measured move, or 50% pullback of the rally. So the market's deciding, are we going lower? Are the bears going to get their second leg down, or do the bulls need a second leg up first? And we're sort of neutral here, but you can see the bears attempting to go down several times and reversing back up several times. That's 2 or 3 attempts down. So when the market tries to do something 2 or 3 times, it often tries to do the opposite. We have breakout points above, bad. Stop order sell here. We got a breakout and follow through. Probably a magnet here, sellers or resistance up here. And if we do test the highs, also probably resistance up there. Because you had a bull trend and then a very deep pullback. Disappointed bulls up here looking to sell. Bears who missed the sell-off also looking to sell for a second leg. It looks like to me that we're in a trading range. And this is the Globex chart. So this is today, the doji bar with the big tail below. So is it a good buy signal? No, it's really not. I think the context makes sense that we may have to test higher. It looks like we're not going lower as of right now. If we do get below today's low, there's probably buyers below. The market's trying to go lower, but failing. Lots of buying pressure, tails below bars. And as far as above this bar, are there buyers or sellers? It's not a very good stop order buy. I would think there are more sellers above tight trading range at the trading range bar, but we may have to go higher than directly above the bar before sellers come in. That's why I mentioned this breakout point. That's an inside bar. This breakout point. So there are test magnets above we may have to get to before sellers come in. But overall, like I said, this looks like a trading range to me. Big up, big down. Lots of overlap, confusion. The moving average is flat. So for me, I'm expecting more trading range price action on the 5-minute. All right, thanks everybody for watching, and I hope everyone has a good night.